be starting Lesson 8.2. If you'd like a very quick review on Lesson 8.1, you could play this 8.1 First Things First game where it has you place in order the process of taking our adjusting entry for supplies and journalizing that. So that's just some extra review for 8.1. Lesson 8.2 is all about recording our closing entries. Make sure you've printed or opened your notes and are following along with them. At this point, we've got our completed flowchart of accounts because we've done everything in our accounting cycle. So the very final thing we're going to be doing is what's called closing entries. And we're closing out whatever month we're at. We're closing or finishing out our accounting cycle. Now, the first thing to note is that we have two different types of accounts. We have what are called permanent accounts and what are called temporary accounts. And this deals with that income summary account and that imaginary line we used to draw on the worksheet. Permanent accounts are accounts that are going to have ending balances at the end of the fiscal period, or for this example, the end of the month. And those balances just roll over and they become the beginning balance for the next fiscal period. So for example, in this case, cash is ending with $6,116 at the end of February. At the start of March, cash is going to have $6,116, and so on and so forth, all the way down for every single balance sheet account. So this includes our assets, cash, petty cash, accounts receivable, supplies, prepaid insurance, our liabilities, which are our accounts payable, and then our owner's equity account, just our capital account. So all three of those types of accounts, or our balance sheet accounts, are going to roll over until the next month. Now these again are called permanent accounts, and they are the opposite of what we call temporary accounts. So if permanent accounts stay and they're permanent from 1 month or one fiscal period to the next, temporary accounts are temporary. They don't stay. In fact, we're going to take any type of temporary account and close it out, which means we're going to make its ending balance become zero. So when we talk about completing the closing entry, we'll take every single temporary account and we'll have to do a little bit of math in order to close out or make that account equal zero. Now the accounts that we do for temporary accounts and we do closing entries for are all of our income statement accounts, or anything below that income summary line. So the first type of income statement account is our revenue account, aka our sales account. And when we close out the account or we make it zero, the money that's in there has to go somewhere. So if I look at sales right now, it has $3,847 in it. I have to put the $3,847 somewhere when I make that zero. So this is when income summary is going to come into play. I'm going to summarize what I've made, or maybe I haven't made if my expenses are really high, everything in that one account. So I'm going to take anything that I have in sales and I'm going to dump it into income summary. So income summary is going to have a number, but sales is going to become zero. The next type of account underneath our income statement are our expense accounts. You'll see that they all have balances. So for example, insurance expense has $250 in it. I need to take the $250 somewhere and dump it so that insurance expense is $0 at the start of the next month. I'm also going to dump any expense account into income summary. So revenue and expenses, any amount that I have in there, it's going to be cleared out, made zero, and dumped into income summary. Finally, we've got our net income, or potentially our net loss. On this worksheet, we have a net income of $1,902. I want to clear that out and make net income $0. If you think back to when we did our balance sheet, we actually did the capital account minus the drawing account plus net income. And so this net income is going to get dropped into the capital account. If I had a net loss, It was the same thing as when we took capital minus drawing minus net loss. So we had merged the net loss into the capital account. So when we clear out our net income or net loss to zero, the remaining amount that's in there is actually going to get figured into capital. The last tricky account that we close again deals with what we did on the balance sheet when we figured the capital account amount. So going back to that math problem, the very first step was always subtracting drawing. So we're going to close out our drawing account, and when we subtracted drawing, we put that into the capital account. So its opposite is going to be capital. So all of these accounts, revenue, expenses, net income or loss, and drawing, are all going to zero out, or we're going to close them out to zero because they're temporary. We're never going to keep whatever's in there. We're going to dump it into that corresponding check mark account. Okay? Again, this is exact opposite of our permanent accounts. And if it's permanent, it gets to keep its ending balance from fiscal period to fiscal period. And those were all of our assets, liabilities, and owner's equity. So we have to make sure that we both journalize and post to our general ledger our closing accounts. The first closing account I have is a revenue account of sales. So I'm going to go on the journal, and I'm going to do this right under the adjusting entries that we practiced in 8.1. But instead of just continuing under adjusting entries, I want to write very first thing is that, okay, these are my closing entries. So I'm going to put a heading of closing entries on my journal. Then what I'm doing is copying down my date, and it would be the end of whatever the month is. So I'm just pretending it's the end of August here, so I'm going to put August 31st. Okay? Now, on my journal, I always list my debit first. And in this case, if I'm looking, I have a sales account with a credit of $3,565. In order to get the credit account down to zero, I need to do the opposite of what's in there. So I would need to debit my sales account $3,565 because remember, if I have a debit and a credit, I subtract those amounts. If I had a credit and a credit, I would add, and all of a sudden my sales would be like 7,000 something. But I want to make it to zero because I'm closing it out and it's temporary. So I'm going to do the opposite of whatever it is. So sales is going to become a debit, $3,565. Now in the journal, the debit gets listed first. So I'm going to write down sales, and I'm going to debit it $3,565. In the journal, if I have a debit, I have to have a matching credit. Now remember, when I close out sales, that number has to go somewhere. And if we take a look back a slide, we're going to drop that number into the income summary account. So I'm going to credit income summary. And again, it has to be equal to debit, so I'm going to credit it $3,565. Let's take a look at what the closing entry would look like journalized for our expense accounts. In this case, we start with the date, so it'd be August 31st, and I'm listing the debit account first. All of these expenses are currently debits. In order to get them to zero and closed out, I'd be doing the opposite. So I would be crediting them. Therefore, I need to list my opposite account first, which again, if I go back to my cheater slide in my notes, my opposite account for expenses, where I'm going to dump everything in there, is income summary. What I actually need is the total of all of my expense accounts because I'm going to drop just one number into income summary rather than making you write out 6 different expenses. So I'm going to take $213 of advertising, $100 of insurance, $28 miscellaneous, $300 rent, 715 supplies, and 110 utilities, and my total number of my expenses is $1,466. And that's the total number that I'm going to be dropping into income summary. So that's going to be 1,466. Now I'm going to list down each expense as a credit because that was the opposite of what it originally was, and I'm going to do the opposite thing to close it out and make it zero. So my advertising expense, I'm going to credit 213. Insurance, 100. Miscellaneous, I'm going to credit 28. Rent, 300. Supplies expense, 715. And utilities expense, 110. Again, if I took all of my credits and added them up, that would equal 1,466 in credit, and that credit number would then equal my debit number. Now I need to close out my net income amount. And if I look at net income right now in the balance sheet column, that is a credit. And so actually it's going to be a debit when I do the opposite. So that's cool. In the journal, I do the debit first. So I can start with my date, August 31st. Now, net income is not an actual account title. Instead, the account title is income summary. So I'm going to be debiting the income summary amount, $2,099. And again, if we check back, its corresponding account was capital because that's where we dropped in our net income when we did the balance sheet. So in the capital account, I'm going to do a credit because the money has to go somewhere when I made it zero in the income summary. All that leaves us with is drawing. Drawing is originally a debit, and so to close it out and make it zero, I'm going to do the opposite. I'm going to credit drawing. No, the credit goes on the second line, the debit goes first. So I need to list my opposite account. Again, let's check back at our notes. Our opposite account is capital. So I'm going to list my capital account first. So Kim Park Capital of $625. And my drawing account then, the opposite of what it was, gets credited, $625. At this point, you would have to take your journal closing entries and you would have to post them to the general ledger. So quick review on posting. The first thing we're going to bring down is the date. So if I'm going to take sales, I'm going to close out sales. I'm going to take the 31st and I'm going to bring that down. The second thing I'm going to do is my journal page number. So these all come from page 3 of the journal. So I'll bring that down. And now if I take a look, I'm going to put my debit or my credit. Sales, as the closing entry in the journal, was a debit of $3,565. So I'm going to copy that down to the debit, $3,565. Now I'm at the point of my balance. And I've got an existing balance of a credit of $3,565. And then my current transaction is a debit of $3,565. So if I look at this cheat sheet, if I have a debit and a credit, I'm going to subtract. So let's take a look. 3,565 minus 3,565 equals what? 0. This is good. Remember, we're closing these out, and if we close it, it's supposed to be 0. So that means we did this right. When we close, we're actually going to put our 0 in both the debit column and the credit column. So we know that this is the end of the month by filling in a 0 and a 0. Once that's done, the very last thing we have to do is take that account number and put it up in our journal to say, hey, this is where that number actually got posted to. And you would continue on down the line. So you would have to post income summary, all of your expenses, capital drawing, income summary, and capital again. And we're going to practice that right now by doing the 8-2 working together. So on our 8-2 working together, make sure you have up your instructions because you're going to need to look at that worksheet. And the first thing we have to do is say on the journal what we're doing. And we are doing the closing entries. So we're going to write closing entries. We are using for the month ended of July 31st. So we can go in and fill out the 31st. Remember, we only close our temporary accounts because they're temporarily there. And those accounts are everything underneath that income summary, and then the really wonky one of our drawing account. So the first account under income summary is sales. And if I look at sales, it is currently a credit. So I'm actually going to do the opposite. So I'm going to make sales my debit, and the debit account gets listed first. So that's cool. So I can do sales, and I'm going to debit the sales amount, which was $5,511. And then over here, I've put the little cheat sheet for which account it gets dropped into. So sales gets dropped into income summary, and that becomes our credit, $5,511, right? The next accounts we have are all of our expenses. So again, we'll put our date down of the 31st. All of our expenses are listed as debits. So to close them, we're doing the opposite, which would mean they'd be credits. Credit accounts are listed second in the journal. So I'm going to skip this first line, and then I'm going to list my expenses. So advertising expense, and then I had insurance expense, miscellaneous expense, and supplies expense. And again, I'm doing the opposite, so those debits are going to become credits. So I'm just copying over my number. I had 821 in ads, I had 300 in insurance, 347 in miscellaneous, and 713 in supplies. Now I need the total of that to go into the debit, because I need my debits to equal credit. So I'm going to take 821 plus 300 plus 347 plus 713. And I need to make this my debit. So my debit of 2,181 equals all of my credits added together. Again, checking the cheat sheet, that should go into income summary. Okay, my next date, the 31st, and I have my net income that I need to close out. Now we need to check that we are using the balance sheet amount for net income, because that's when we took our net income and we lumped it into capital, was actually when we created the balance sheet. So the net income balance sheet says a credit. So I'm going to do the opposite, which means my net income gets debited. So I'm going to take that amount, that 3,330, and debit it. And remember, there's no such account title as net income. The account title for net income is actually income summary. Okay, I previously on the balance sheet had lumped it into capital, so I'm going to put this in Darlene Wong capital. Name my 3,330. That last tricky account that we previously lumped away was our drawing account. Drawing, you'll see, was a debit, so I need to do the opposite to close it out, so I would need to credit it. On the 31st here, my credit always goes in the second line, so Darlene Wong drawing is going to be my credit, and drawing was 2,100. And again, I had previously lumped it into capital, so that's my opposite account, Darlene Wong capital. And I need a matching debit of 2,100. So that takes care of our journalizing. And now we're going to go down and we are going to post every single one of these closing entries. So the first one is sales. So I'm going to open up sales. It was the 31st. It's coming from journal page 4. Sales was a debit of 5,511. And if I have a debit and a credit and I subtract them, I get 0, which is good. I want it closed out. So I'm going to put 0, 0, take my 410, and make sure I post that to the journal. The next number I have is income summary. So I'm going to go to income summary. This was on July 31st. Everything's coming from page 4. I'm just going to fill those in quick. And my first income summary was a credit of 5,511. Nothing to add it to here. So credit plus a credit is a credit, 5,511. 330, go up to my journal and post. I have another income summary right below that, and it's a debit of 2,181. So debit 2,181. My previous balance, if I take a look here, was 5,511. And I have a credit and a debit, so I need to subtract, so minus 2,181. And I've got 3,330 goes in the column with the bigger number. The credit was bigger, so I'm going to put 3,330 there. Post up my account number. And now I'm going to go down to advertising expense. On the 31st, page 4, advertising expense was a credit of $821. Now when I subtract my debit and credit, I get 0, 0, which is good. We closed that out. 510 for my account number. Insurance expense, if I scroll down here, on the 31st, on page 4, is a credit of 300. Debit minus a credit equals 0, 0, which is good. Closed that out, 520. Going to go to miscellaneous expense. On the 31st, page 4, miscellaneous expense was a credit of 347. 347 minus 347, 0, 0, closed out. Bring up my account number of 530 and finish out our expenses with supplies expense. On the 31st, still page 4, supplies expense was a credit, so 713 in the credit. Debit minus credit is 0, 0, closed out. Bring up my account number. And now I'm back to income summary. So when I go up to my income summary, my last one on the 31st, page 4, it was a debit of $3,330. So debit, $3,330. I've got a credit and a debit, and when I subtract them, I'm all set. I'm 0, 0, closed out. Bring my 330 up to the top. And now I go down to capital. So capital on the 31st, coming from page 4. My first capital is a credit of $3,330. And here's a case where I have a credit and a credit. So I actually need to add. So $3,330 plus my existing credit, 6543. And I've got a total of 9873. Bring my 310 account number up here. And now I can post this second one, this debit. So it's still on the 31st, page 4. It was a debit of $2,100. Now I've got this existing credit and a debit. So credit and debit means I need to subtract 9873 minus 2,100. And I get 7773. And I need to put that in the column with the bigger number. So the credit was bigger. So 7773. If you're like, oh, why isn't this 0? I'm super nervous. Your capital account won't actually be closed out. Remember, we're closing out our temporary accounts to 0, and capital is a permanent account, so it will be more than 0. And then we bring up our account number, 310. And the last one we have to do is our drawings. If I go to drawing, on the 31st, came from page 4. It was listed as a credit. And now I've got a debit and a credit, so I can subtract. I got 0, 0, closed it out. And 320 is my final account number. So if I check my answer, I should have everything all done. At this point, you're going to want to do the 8-2 on your own and the 8-2 application problem, both on Applia. Then you're going to want to do the 8-2 EOLR on Schoology. And then you'll have one final thing on Schoology to do, and that is this 8-2 quizzes. So you can take this quizzes as many times as you want. I'll take your highest score. It's a review over everything related to 8-2. So you'll also need to do this as well.